Hey everyone, in this video we're going to be looking at the test prep problems for chapter 3. And if you recall, in chapter 3 we're going to be looking at the process costing as opposed to the job costing of chapter 2. So remember, when here back to our job costing, we've got costs by specific job and we aggregated those costs, etc. But remember, here in chapter 3 we're going to be doing costing by process. Or you can think of it as like process cost per department, essentially. Steps of the process, steps of the production cycle, etc. So let's take a look at the information provided. And remember, in chapter 3 we have this production cost report. And we're going to use that to calculate equivalent units of production and then determine a cost per unit, essentially. So with that said, let's take a look at our data here that we're provided with and go through and complete the problem. So in this problem, it tells us that we have 10,000 units at the beginning of the month. We added in 95,000 units started, and then we have 5,000 ending with 40% complete as to conversion costs, so labor and overhead. And in this problem, we're going to assume that we're 100% complete in regard to materials. It tells us assume materials are added at the beginning, so they're 100%, but labor and overhead are 40%, and so we'll have to do the equivalent units of production based on that. Okay, so let's start filling out our sheet here with the information above. So work in process beginning here, and remember, when it tells us the percentage of completion at the beginning of the month, we don't care about that because what we only care about is what's in the what's the completion percentage at the end of the month. So you can ignore the 60%, but we'll be filling out, this is our unit started into production, so we'll just add those together. So we had 105,000 total units that we're going to be accounting for, and so we can take that down below the total units here. It tells us, what does it tell us? Okay, it tells us how many units are in WIP at the end of the period of the month, and so 5,000 are left over, and then we just take the total minus what's left, means that 100,000 were transferred out. So these match up, and then we back into the amount transferred out. And remember that everything that was transferred out is 100% complete. If it wasn't, transferred, it wouldn't be 100% complete, essentially. And then we have to look at the percentages here for the WIP, the ending WIP, though. So materials was 100%. It tells us, we talked about that a minute ago, and then 40% for labor and overhead. So now we've got 2,000 equivalent units and at 40% of 5,000, and then this is 100%. So basically just taking this number times by the percentage of completion rate. Okay, and then let's add together our total units here. So just adding these numbers all up, and that's our units. And then we're going to look at costs down here, and it's got a bunch of data that we're going to work off of here. So it tells us that beginning work in process, we have 15,000 in materials, 17,000 in labor, and 13,000 in overhead. So you can see those three up there. And that is input here on the beginning WIP costs line. I'm going to put dollar signs on those just to help us differentiate units from dollars. Okay, and then it tells us cost added during the month. We've got, I'm just going to link above, we got 195,000 materials, labor, and overhead. Again, I'm going to have a summation there. And again, just the dollar signs here to differentiate. Okay, so now again, we just, kind of like we did above, we're just adding those together to get our total costs accounted for. Okay, and then we're just going to bring down our equivalent units. So that's from above. And these are units, so not costs. So we'll leave the dollar signs off there. And then we will come up with our unit cost then by taking the total cost divided by the equivalent units there. So 210 divided by 105,000. These are dollars. So I'm going to format those, and then I'm going to just drag my, or I'll just do it just so y'all can see. Cost divided by units equals cost divided by units. Okay, add some decimals there. Okay, so now we've got our unit costs in materials, labor, and overhead. And let's look down here at our amounts transferred out. So here we're just going to take our unit costs times our total units transferred out. And we'll sum those up. And again, down here, I'm just going to do this all at once. This is all dollars. Okay, and then work in process ending, we're going to take our $2 times the equivalent units in work in process. There is 10,000. So that was the $2 per unit times the 5,000 units in work in process for materials, and then $1.80 times the 2,000 for the labor, and $1.03 times the 2,000 for overhead. Okay, and then we're just going to bring those over to the column here, add the total costs up, including the amount transferred out here, and then all the stuff that's in WIP, and you can see that we reconcile these two amounts agree, and that's what we want to see. And if we want to know what's in total WIP cost at the end of the month, we can add all three of these together. So we have $15,660 of cost in WIP at the end of the month. Okay, so that's our whole, and then the cost of the amount transferred out to the next department or process is $483,000 there. So great. Okay, let's look at some journal entries related to this whole process here. And we're going to say labor paid was $1,500. Of this, $1,250 was direct labor and $250 was for supervision. So exactly like the process that we did before. And I'm trying to, let me just look real quick. Just trying to see if these are related. Okay, no, these are all just, these are totally separate problems down here in number 2, I think. But good practice problems anyway, but not related to this information above necessarily. Okay, so we've got labor paid. And so we can see $1,250 direct, $250 for supervision. So remember, the direct goes to WIP, supervision's overhead, and then factory payroll expense is going to be our credit. And we're going to say, so that's the total is $1,500. Then we're debiting $1,250 to WIP and $250 to overhead. And we will say to assign payroll costs. Okay, so that was A. B says a company estimates direct labor for the year to be $2 million and factory overhead to be 1.7. Direct labor is this. Okay, so it's telling us first we need to figure out our predetermined overhead rate. Remember, this is not the activity-based costing version. This is just the traditional method, just using direct labor dollars. And so we're estimating $2 million in overhead and $1.7 million in direct labor. So we're going to assign $1.18 of oh shoot, you know, that's right. Okay, so $1.18 of overhead per every dollar of direct labor. And if we had $100,000 of direct labor, then we're going to multiply that times the $1.18. And so we're going to end up with 117,000 in, wait, my answer sheet. Direct labor. Oh, I have that backwards. I'm sorry. The company estimate, this is direct, I should have wrote these in. Direct labor and overhead. So let me rewrite this. Okay, be careful when you're reading these problems. I just had that backwards. So the estimated overhead is 1.7 and the estimated direct labor is 2 million. So the amount of, we're going to put 85 cents of overhead per every dollar of direct labor. We had actual direct labor during this month of 100,000. So our applied overhead then is just taking 85 cents times 100,000 to give us 85,000. And then remember, when we're doing our overhead application journal entries, we do debit to WIP and the credit to manufacturing overhead. We'll say to apply manufacturing overhead. And again, that was the 85,000. Okay. Let's see. C asks us at year end, a company's manufacturing overhead account has a credit balance of $3,000. And so what are we going to do to what journal entry are we going to do to clear that? So this one just tells us if you have a credit balance, you're going to need to debit that overhead account, get it to zero out. And so remember, we always go to cost of goods sold as the offset. So if we have a credit balance, when we debit that, it's going to go to zero. You know, debit it for the same amount that its current credit balance is. Manufacturing overhead goes to zero, and cost of goods sold gets reduced by $3,000. Remember, it's a debit. Normal balance is an expense, and so in essence, we would be over applied in terms of our overhead if that was the case. So that's a better position to be in as a company, rather than we've basically applied too much overhead. Make sure I'm saying that. Yeah, our applied overhead was higher than our actual overhead, and so we are closing that out, and we're reducing COGS, which is kind of favorable, right? From a business perspective, our profit goes up because we're reducing our expense related to the sale. Okay, last one. A company sells a job for $10,000, and that job costs $8,000 to make. Write the complete entry for this sale and its sale on account. So these are all kind of basic, just fundamental types of entries, etc., from chapter 2 and 3, and not so much in chapter 4, but more so 2 and 3. So let's just finish this one out. We've got COGS and cost of goods sold and finished goods inventory. And it tells us that we sell it for $10,000, so our revenue and our receivable, we're going to collect the $10,000, and it costs us $8,000 to make. And then just for good measure, let's put to record sale. So these are just some foundational types of journal entries that you should really have well grasped. Again, these journal entries here don't pertain anything to the process costing report that we finished above, but they're just important things to know. The one highlight I will say maybe that is unique to chapter 3, and it doesn't ask us to do this, but just for the heck of it, if we are the assembly department, and let's assume there's the packaging department, for example. The one special journal entry that we would have in chapter 3 that was not in chapter 2 would be that we would, when we finish these goods, right, or we finish the production process and transfer these $483,000 out, it doesn't necessarily go to finished goods yet. Let's assume we're the process before let's assume the final process is packaging and we are production. And so our WIP production, so we're going to reduce I'll link it there. We're reducing our costs by 483 and moving that into WIP for packaging, for example. And we'll say to complete production. And then if packaging is the last part of the process, then we'll do this whole process here, and then it would go to finished goods if that's the final step in the manufacturing process. But it didn't specifically ask us to do that here necessarily. But yeah, just something to keep in mind, because I know that was in the chapter and kind of one of the unique things. This information down here basically pertains to either 2 or 3. But this here is specific to process costing in chapter 3. So, all right. Well, thanks everybody. I'm going to close this video out and then record a separate one for the chapter 4 solution. So thanks for following along, and I'll see you in the next video.